So, welcome back to the Armchair Trader podcast. And it's been a little while since we've been talking about digital assets. I know we've discussed Bitcoin mining on the podcast in the past, but we thought we'd revisit that subject because there's been a lot of water under the bridge recently with Bitcoin and Bitcoin mining. So, we've got Didar Bekbauov, who's joining us from Xive. He's the founder and CEO of this Bitcoin mining group, and I thought it would be useful to get an update on what's happening with all things Bitcoin and particularly Bitcoin mining. So welcome to the podcast, Didar.
Thank you, Stuart.
So I wanted to start off with actually what Xive is. Could you give us a quick rundown on the company itself, what you guys do?
Basically, we build data centers for Bitcoin mining, then we maintain it. So we have some data centers in Kazakhstan, in United States. We've been doing it since 2018.
Cool. And presumably you started in Kazakhstan and then moved over to the US as well?
Right. So we started in 2018 in Kazakhstan. Back then we had just mining in our kind of garage. Then we understood that this is a good opportunity because in Kazakhstan we had cheap electricity. So we started to scale. And in 2022, governments restricted electricity for miners because it was huge industry and energy system couldn't catch up with this demand. So we had to move. So we moved to Houston, Texas.
Which, I mean, it surprises me with Kazakhstan because that's quite an energy-rich country, isn't it? For it to suddenly be facing a energy consumption challenge from something like Bitcoin mining.
Right. Problem with Kazakhstan is the whole electrical infrastructure is old. So it was built back in 1960s, 70s during Soviet period time. And since we got independence, we haven't built much. Our main problem with it, because government regulates this electricity sector too much, so they put some restriction for price increases. They control the prices, everything. They control everything, so that's the problem. Nobody wants to invest in power plants. Nobody wants to invest in substation because it's too much regulated, and almost you can't get your money back in like 10 or 20 years if you invest in such projects. So that's a problem, main problem with Kazakhstan now.
And is it true that when China banned Bitcoin mining, a lot of Chinese companies moved to Kazakhstan? Was that one of the countries they chose to relocate to? And did that exacerbate the problem because there were suddenly more Bitcoin mining operations there?
Yes, so when China banned mining in 2021, a lot of Chinese miners moved to Kazakhstan. So almost every substation which had some power in it, so it was utilized. So the energy system, I think, was utilized for 100% and maybe slightly more because Kazakhstan also buy some electricity from Russia as well, and that caused the problem. So suddenly, Kazakhstan electricity consumption increased by 7%, and the energy system wasn't ready for that, and government wasn't ready for that. So they started, make quick decisions about restricting electricity for miners and making some unfavorable regulations.
And so you made the decision to start relocating operations to Texas. What was the attraction of that? Why go to Texas?
When we realized that there is no uh, opportunities in Kazakhstan anymore to expand our business, we started to think where should we go next. So we had options in Paraguay, we had options in other countries, but they were quite similar to Kazakhstan in terms of country risks. So if we go there and someday government just don't want miners there, maybe within 2 or 3 years we can face same problems that we faced in Kazakhstan. So we decided for long term, United States is the best, and among all the states, Texas looked like a good point to start. Because in Texas there is deregulated market, the government don't have much control over the grid, and so it's all market based economy. So we decided for long term expansion, Texas is a good place.
And how much Bitcoin are you mining at the moment from your total operation?
Most of our machines belong to our investors, so we provide maintenance service for them. So, but we have more than 20,000 machines under our management. And I didn't calculate how much they made because all the bitcoins directly mined to the wallets of our investors. So our part is to maintain the machines, maintain the facility, do the repairs. But we also have, yeah, some our own machines, which we mine for ourselves. And it's slightly more than 1 Bitcoin per day.
And investors themselves, how do they get involved if they want to buy Bitcoin mining machines from you and start getting Bitcoin direct into their wallets? What do they need to do?
Basically, we simplified everything for investors because we have this in 5 years, we have all the needed connections with manufacturers, with the logistic companies. We know how to do custom clearance and everything. We know how to build, how to maintain facilities. So basically, investors either buy machines and send machines to ours, or they outsource all the services to us. So we get the money and we buy machines, we transport them, we help with the registering the company within any like jurisdictions where we work. So basically, investors they don't do much of the work, so they just make decisions when to buy, where to place these machines, and for how long. And the rest of the work is done by our team.
And in terms of where the machines are sited at the moment, new machines, are you siting them in Texas, or is there still an option to have machines in Kazakhstan as well?
In Kazakhstan, there is still option, but the problem with Kazakhstan uptime. So we don't have like 100% electricity supply. We only use off-peak hours. So it's during the night. So we have like 12 hours, and during the weekends. So and the average uptime is like slightly 65%. So it's maybe good with the old machines, but with the new generation machines, of course, we will suggest to go to places where you have at least 95% uptime. There are several options in the United States right now because some of the miners they just uh, went out of the competition. I mean, they had some older machines, so they had to shut down some operations, but infrastructure is still there. So now we can choose not only in Texas, we have some facility in West Virginia, we have in Iowa, so now Kentucky and Georgia. So we have several options in United States right now. So we can place in any state where we find a better deal.
And has there been a lot of rationalization in the US Bitcoin mining sector? I mean, you've touched on some people going out of business already. Has there been a bit of a shakeout in the sector? And does that create an opportunity for you guys to acquire new machines and facilities?
Yes. So in the United States, uh, everybody's preparing for halving now. I mean, not only in United States, but in United States particularly, everybody's concerned about it because here you don't have maybe cheapest electricity in the world. So if your operations are less competitive, for example, than in Russia or in Paraguay, then you have to think now what to do because after the halving there will be hundreds of thousands of machines on the market and the price will be I think very low because and now whoever plans to close their operation or sell their machines should start acting now because now there is still a good price for the machines you can sell and facilities. So also if you have some facility which you're not planning to use after the halving, maybe now is good time to do something with it while there is not so much supply on the market. After the halving, I think we will see more.
And for people who are not familiar with the halving, which is forecast to be taking place next year, can you explain what that is and what the implications are for the Bitcoin mining sector?
Yes, absolutely. So every 4 years, approximately 4 years, Bitcoin mining reward cuts into two. So basically now we got 6.75 Bitcoin per block when we add this block to the blockchain of Bitcoin. After halving, which will take place in April 2024, we will get like half of it, like 3 point something. So basically our revenue, miners revenue, will drop 50%. And we will still have our expenses like paying for electricity, paying salaries, other expenses, but our revenue will drop. So basically what happened before, uh, during these cycles, like in 2016, 2020, after the halvening event, like in after maybe 9 or 12 months, there was always a rise of the Bitcoin price. So basically, Bitcoin went up in 2020 from like 8,000 to 60,000 in 2021. In 2016, from like less than 1,000 to 20,000 in 2017, and this time we also like we believe that after halving, we will see some Bitcoin price increase. So otherwise, there will be a lot of bankruptcies in our industry because basically 50% revenue reduction is very, very hard for miners.
So you think, I mean, I know it's difficult to forecast the Bitcoin price at the moment, but it almost sounds to me like with the Bitcoin halving next April, there could be a rise in the price baked in because of that, based on
Yeah,
its historic performance.
yeah, based on historic performance, based on some statistics, and we believe in that because otherwise there is no point to do mining at all because it's easier to buy and hold Bitcoin, and mining is additional risks, additional work. So, and it's hard work. I mean, to maintain all of these facilities and machines. So, because we believe that there will be Bitcoin price increase, we still are in this business, and so we believe in these statistics.
But I mean, from what you've been saying, it sounds like Bitcoin mining businesses may not have a glorious future because of the fact that it's going to become potentially less profitable over the long term. You may see a rally in the Bitcoin price next year, but if the price drops back down to, let's say, $20,000 per Bitcoin, that could make it really difficult for a lot of miners in the US and elsewhere.
In this industry, there is a competition for the block, right? For winning the block and adding it to blockchain. And whoever have a less cost of electricity, basically, because electricity, the in percentage, I mean, 80 or 90% of all expenses of miners is electricity cost. Whoever have cheaper electricity will be like in better position. And also capital, like spare capital companies like Riot and Marathon, for example, in United States. So they holding some capital in the like for the case like after the halving. So they will be waiting for some miners to struggle during this period, and they are waiting for some these distressed assets to buy, to like machines. So some of the miners will like be strong after the halving because they're kind of prepared with the capital reserves. to utilize this capital during the hard times, and some of the miners probably will go bankrupt. So basically, for Bitcoin, will not change much because some players will go out, some players will come in and grow stronger. So for Bitcoin, it's all good. But yeah, for the miners, it's a struggle.
And you've mentioned on this podcast already, we've talked a lot about the cost of electricity because that's really a big part of your costs for running a Bitcoin mining operation. We've in the past when we've talked to people about Bitcoin mining, the whole issue of electricity comes up again and again and again, and also, um, whether that electricity is clean electricity and how much the Bitcoin mining industry is potentially contributing to global warming. What's your own strategy here? I mean, in terms of actually making sure you get cheap enough electricity to run a business like Hive, and also do you get asked by investors about where the electricity is coming from and how much green power you use?
So here is a trade-off. So cheapest electricity usually in countries where you have like fossil fuels and coal source of electricity. So that's the cheapest electricity in the world. So you have, yeah, China had it, Russia had it, in United States also. The grid is like, I think 70 or 80% is fossil fuel based or coal based electricity. So the problem with the green electricity that it's not reliable. So it's not like 24 hours you have this electricity available. For the solar panels, you have the electricity when there is a sun. For the wind power station, you have only when there is a wind. So the challenge was how to make it more reliable and stable. So that's why even in the grid, even other consumers, they don't have like 100% renewable electricity in their homes, in their businesses. But now we see some solutions. So now there are battery storage projects where you can store this electricity and then later use it when it's not available in the grid. So in our case, so we didn't pay much attention on that because in Kazakhstan, I think less than 3% we have renewables in the grid. Now it's slightly growing. So even if we wanted, we couldn't do it because it's already utilized by someone. So we had just had to use some electricity from the grid. Then we, like since I think last year, yeah, we found out that we can use flared and stranded gas, which are on the oil fields, to build some power station gas turbines there and then use this electricity for mining. In this way, we are not only contributing for using some kind of clean energy, but we are reducing flaring of this gas, which makes a lot of carbon emissions. So this kind of projects started to, get my attention, and we are in process of developing several of these facilities. Also, we do some project with UK-based company in Kyrgyzstan where they built the small hydropower plants in the mountain rivers, and we place for excess electricity we place mining operation there. So they have a base load which is supplied to the grid, and they have some base load for us, so for miners. That way it helps them to work stably within the seasons, because there is also seasonality in these hydropower plants. And we also consider some projects with battery storage and mining. So we changed our focus because now there is a technology of battery storage. We have some understanding how to do stranded and flared gas projects, and we now, because before we were just like wherever electricity is cheap, we just go there, build and buy electricity from the grid. So if in the grid like only 30% renewable, then we use only 30% renewable of electricity. But now we're starting to change our focus to more and it's not like dictated by the willing of our investors. So basically, they are not too much concerned about it. It's just our own change of perspective, which electricity to use. If we can use greener electricity, why shouldn't we do that?
I mean, the last question I want to ask you on the podcast was, and it's not really a core area of your expertise at Hive, but the Bitcoin price has been dictated a lot recently by developments with the SEC and regulation of ETF products in the US. Obviously, a lot of big fund managers currently trying to get their Bitcoin ETFs over the line, and these are products based not on futures but on actual Bitcoin holdings. The SEC's been pushing back on that, but it seems to me like a lot of investors are using this regulatory battle, this tug of war, as a measure of sentiment in the market and are buying or selling according to what they're hearing coming out from Washington D.C. What is your perspective on that as a miner? I mean, and also as someone who's operating businesses in the US, do you think that we'll see approval and what the prospects for Bitcoin will be after that?
Yes, I think it's just a matter of time. So I've been watching this whole history about ETFs for several years. So they're trying to do ETF spot in United States, and the position of SEC is clear. So they're saying we want to protect investors from Bitcoin price manipulation. There is a lot of manipulation in Bitcoin price, so it goes up one day 20%, next day like 50% down. So and basically SEC, what I understand, they see this manipulation from unregulated exchanges, which are managed by some Chinese companies, so like Binance. So they say we need to regulate all these exchanges, but the Chinese exchanges, they don't want to be regulated in the United States too much. So local exchanges like Coinbase and others, they're okay with the regulation. They want to comply. They want to report everything to SEC and work in this structure. But Chinese exchanges, they don't want to do that, and that's the main problem. I think as soon as the problem with the regulations for exchanges and accordingly with manipulations will be solved, then we will see approval. Until that time, we will have these concerns from SEC about protecting investors and everything, that Bitcoin is not like very compliant with how the financial markets work right now. So they see a lot of risks for their investors, and I understand that. I think this is good position. So because I saw for the last 5 years, many people they lost a lot of money in Bitcoin, in other cryptos, in NFTs, in all these manipulated assets. So and I saw people losing everything. So I don't want to like other people to suffer from these manipulations as well. So I believe that there should be some regulations, good regulations, not only not only miners, yeah, because miners is easy to regulate, but exchanges as well, crypto exchanges. But maybe it's not gonna happen this year. Maybe even next year. But I believe like sooner or later we will see ETFs, we will see good regulations, so and we will see some less volatility in Bitcoin price.
Fantastic. Well, thank you very much indeed for your time this afternoon, Didar. That's very informative indeed. And just to finish, if someone is interested in buying or renting Bitcoin mining machines and want to talk to you about that, where can they go?
So we have a website where they can go study everything, connect to us via support, or they can find me directly in LinkedIn. It's or Twitter. It's Didar Bekbauov. So I think it's easy to find me and text me directly. I will try to reply.
Fantastic. Thanks very much indeed for coming on the podcast this afternoon, Didar.
Thank you, Stuart, for inviting me.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.